Well, the underwriters that took Facebook public are cutting their estimates on how high the stock will go. And guess what? The stock fell again. We've got Alexandra Skaggs joining us now on the set from Dow Jones Newswire. Pretty bad if you're... There it is, 1776, down 1.7% for Facebook, went public at 38 and hit 46 up. So if you bought at 46, you're really hurting now.
Yeah, you're in trouble.
You're in big trouble. So what are the analysts at Morgan Stanley and JP Morgan Chase saying?
Well, they cut their price targets both today. I think JP Morgan's was more than 30%. You know, it was a pretty big cut. They were actually the biggest bulls on the street before now.
And they still look pretty bullish compared to where the stock is, though. I mean, this isn't, they're not cutting it to $11, which would be a substantial decline from where it is now. They're cutting it to what would be a massive jump from where it is now.
Yeah, I think around 66 and 77%. I mean, they're definitely not bearish on the stock. It's pretty tough to say that at all. But the funny thing is that Morgan Stanley actually, in their bear case scenario, says the stock could fall as far as 17.
Oh, so we got a little
way. And
way
that's below where it is now.
It's a little bit below, although it doesn't seem quite as low as it would have done even a few weeks ago. Now, part of the reason they continue to be bullish is the mobile ad revenue. They expect that to more than quadruple, right? Yeah,
JP Morgan said it could surpass 900 million next year.
So it could, I mean, that could get up to a billion very easily if they overshoot that market from around about 200 million this year, which is really quite small. Now, mobile is something that everyone's grappling with. It's been tricky for most companies, hasn't it?
Yeah, it has, and Facebook especially. You know, they're introducing these sponsored stories on the news feeds. Both underwriting firms said that they're seeing a lot more click-throughs. So they're saying that the ads themselves are worth more. But the problem is, and Morgan Stanley pointed this out, is that there are fewer of them. So it kind of evens out that way. And that's actually why Morgan Stanley cut their long-term projections.
Okay, well, we shall see how it pans out. It's still fairly bullish compared to where it is now. Thank you very much.
Thanks
Alexandra
so much.
Skaggs. You can read more on that on WSJ.com.